Good day, traders. I hope you guys have an exciting week. Oh, sorry. Enough of the music, guys. Now, today's topic is the Euro New Zealand dollar. Why did I sell Euro New Zealand dollar? Now I know that Gregory Johnson, a very dumb motherfucker, does not even understand why we sold it. But well, when we talk about Stacey's concept and people who have been trading Stacey for years and following Stacey for years before the playbook, before any other new stuff we see today, we are the OGs. When I mean OGs, we are the old G's. A trader who have how would I put this? I did not get to see other types of trading like supply and demand, SMC, ICT, a lot of stuff. I started with Stacey as a newbie, just Stacey, no other knowledge of trading, only Stacey. Now imagine someone, a little baby, you program that little baby, you teach that little baby how to program, how to write JavaScript and all of that. That baby becomes very good in JavaScript. The baby did not start any other course. The baby started learning Java till the baby grew up. All that baby knows is Java, no other pattern of trading. Now for me, I decided to expand my knowledge of trading to take a look at Al Brooks, and because he's Stacey's mentor, Stacey has mentioned him and has advised us to look into him. Now Stacey always encourages traders to get their ebook, to create their playbook. Create your playbook. The day he said that in so many of his videos, he said make a playbook of your own, okay, and master a specific setup. Master something that you know will be of great use to you in the future. Okay, so me, as at that time, I said, okay, I want to understand what is a 3D setup, because I notice anytime we have a signal day, it always leads to a 3D setup. So I was like, what is causing this? Why is this happening? Why do I see this market behave like this? 3D setup down, FGD, 3D setup off, up, FRD. So the algorithm in my screener is reading 3D setups as it builds up. Is taking the instructions, the experienced instruction of myself. But when you want to take a course, when you study a course, you would have introduction, you have another topic, you have another topic, you have another topic. Now you can be looking at 3D setups first ready, but you are missing a topic inside of the main template. You can be missing out of balance markets that are in balance, trading outside of the box, trading inside of a box. You can be missing median price. Obviously median price, I know most of you who are new did not study median price. Now you can be missing the 20 EMA lectures. You can be missing trend line lectures. You can be missing market structure, trading in a bear trend, trading in a bull trend, patterns of entry, advanced first red day, advanced first green day, which I will teach my students in the mentorship program. Step by step, gradually, we are moving from 3D setups because there are traders who already have an idea. Okay, so from 3-day setup, we're looking at markets that are out of balance. Now, why did I sell Euro NZD? Euro NZD is out of balance. Now, if we take a look at the ebook, do this as fast as possible. Let's take a look at the ebook. Out of balance market. Out of balance market. Out of balance market. Take a look at this example on Euro GPY. A market that is out of balance. When a market is out of balance from the opening range low and imbalance under previous day's high, is a powerful reversal setup. Can you see that Gregory is not even up to it? He's not on my level. Can never be. Can never be. So yes, we see it again playing out today on Thursday, Euro NZD. We're out of the opening range low and we are obviously underneath previous day's high. Let's take a look at chart. Now, look at this. We have a whole week right here. Okay, we have a whole week right here. We have okay, let's take out the US session window. I don't like these boxes on. I just use them when there's a need for it. Now look at this chart. We have Monday high, Monday's low. When the market goes underneath the opening range low and fails that previous day's high, this is a setup. Advanced trading. This is SB. When the market that is in a bear trend, I've identified it here. When the bear trend, we are out of balance. When the market is out of balance and is accepted, what definitions did I give you guys in the playbook? I give you guys my best, the best of everything you can get in that book, because I know that there are lots of people out there I can help that cannot understand SB directly, but when they look up to me, I can make it easier for them. I've taught a lot of people and I keep repeating myself. SB playbook is not just something you just take and you screw through. You haven't finished the playbook. You are looking at the masterclass. You have to finish your masters before you go for a doctorate. You don't leave the masters and jump to a doctorate. That is trading. The pattern repeats itself again. It repeats itself. For those of you who have eagle's eye, look at this. Now, in the playbook, what did I say? What did I say about the H4 rule? There are rules that govern our entry. There are rules that govern the entry. There are rules that govern our H1. There are rules that govern 15 minutes. On the 15 minutes, we are now in a bear trend. The market taps the previous day's high and reverses immediately. This is the first break reversal inside of a weekly range. The new week, the market breaks out, I came to my screen quite late. Okay, let's take this line off. Now in the entry Bible, what did I say about entry? Sell below bear bars, closing near their lows. Guess what we have here? It would surprise you of the candle we have. These are bear bars, okay? Closing near their lows and underneath the moving average. 1. It goes underneath the daily moving average. 2. 3. It became very clear and very strong for me to enter this market. A gap time. And also we broke out, we've pulled back. In this channel, pullbacks have a criteria we follow. Pullbacks have a criteria we follow. That criteria, one, is met on the 5-minute. Trading in a bear trend. Go to the playbook. Go to my ebook. Look at trading in a bear channel. What type of channel is this? What do we want to see? Al Brooks. Place limit orders at moving average on the 5 minutes. The market takes the entry, breakout, 2-bar pullback, continuation. Will this market continue going down? I don't know. But already we are in the money because we saw it earlier enough. Okay, we are in the money earlier enough, and this will give us a very good idea. I'll be downloading this stuff now and I'll send it to the group. Now look at this channel. Let's go to our ebook, Trading in a Bear Trend. The major round number trading Bible stroke entry model to track the best trade setup on various pairs by Gakuna Trading, copyright 2025. Now we look at trading in a bear trend. Now take a look at this. This has instructions. We need to follow the instructions. Take a look at this. Can you see this? Now that brings me back to following the rules in trading. When you see the patterns, refer back to the book. There are so many topics under this book. There's median price. People have not even studied, because when you study it, you get my idea of a simplified process of trading. God has blessed a lot of teachers out there who are there to help people understand what someone else teaches that they don't understand. Sell below bear bars closing near their lows. Al Brooks, that is the entry. Especially when you have more than 20 bars underneath the EMA on 5-minute chart or on the 15-minute chart. Once there are more than 20, you should know that reversal is strong. Now back to business. GBP USD, GBP US dollar. This may become a double top and break even already. This may become a double bottom reversal back inside. So be careful, guys. We still have 2 hours left. Now GBP USD. Now I sent a signal to buy. Now there are certain criteria here. We're out of balance at the high. If you go to the ebook, you will see the same pattern. And I taught my students in the mentorship to be wary of this. Although it's a head and shoulders pattern, if you look very well, those of you with eagle's eye, soldier, head, left shoulder. So but we're out of balance. Most patterns fail. Who knows what this market intends doing? Maybe in the 3rd hour they surprise us, boom, 3 sessions set up, reversal back inside. Who knows? I have no idea. But I have bull bars closing near their highs and above the moving average on higher time frame. This gives me a different perspective of the market at this point. Now take a look at another market that is very interesting. The NZD USD, very interesting market. You can see that those of you who have the ebook and you are studying, you should know what happened here. Go to your ebook. The ebook will guide you. Those of you who have the ebook should understand what is happening here. You should know what's happening here. You should know. It's very simple. Just read it. Look at the chart. What is the chart doing? Very simple process. And understanding something again. Trading inside of the box. Look at this pattern on USD Swiss franc. Stacey talked about trading inside of the box. Now remember, Monday, Tuesday, Wednesday forms the box. But we have triggered the edge of the box. This is the edge of the box. That is the edge of the box. hold on, I'm looking at my GPGPY trade. I think I'll inform the guys to close. Hold on. If GJ acts stupid, close off. Close off GJ if it acts stupid. Let's not all right, now we saw the GJ, but it's behaving very stubborn. I don't understand. GJ always behaves this stubborn. Now there are trades I didn't give the group. I bought NZD USD. We'll look at that. Why did I buy it? And other related issues. Now we have a market that is back in balance. Now the balance guidelines, which is in the ebook, which I posted on previous video, which there are so many other aspects of balance markets that traders needs to understand, and I'm here to help you guys understand that. Without looking at the screener, you don't need to look at the screener always. The screener just gives you a clue of how to mark up your chart and know why the market is saying this. Especially the 3-day setup. I built that screener especially for the 3-day setup. I wanted the developer to perfect it for 3-day setups only, but he advised me to add signal days. I said, all right, let's put on the instructions for first read the outside the that is the 0 inside the 3-day longs and shorts. Let's just put it for the traders to see how it looks like. So now we are back in balance. Whenever a market is back in balance, okay, it seeks to investigate the opposite direction, but they may not investigate it today. The market has moved sideways. This becomes an area of what? Agreement. It's in the ebook, area of agreement. An area of agreement is equivalent to the height of prior move. Study that. I won't emphasize much on that. This is an area of agreement, a trading range moving sideways from high to low inside of what? Balance. We're in balance in this market, moving from high to low. This market may give us something, but I was not looking at this. This is a trading range. Come on, this is a trading range. Look at them, from high to low, from high to low. Who wants to waste their time here? Nobody wants to waste their time here. We're in balance. We wait for tomorrow, Friday, the closing range. We may have an explosive move. GJ, stop messing with me. We sold and they are messing with me. We sold and they are messing with me. Now, why did I sell GJ? You know, yesterday, like I said, we are coming out of a 3-day setup and 3-day longs, which will evolve to a signal day. The signal day is a pump and dump setup. First red day is a pump and dump setup in a downtrending market. Now the market breaks the low in Asia, reverses back into the existing profile within previous high and low. It reverses back inside. It pulls back to the opening range high and rejected, and we are back in balance. Now this defines the balance. We have bear bars currently. They may be planning something. So I've instructed traders, if they behave stupid, you close. Do not wait for this market to. Already we are in with small positions, looking to add size, because you don't just jump into the market. You trade with your head. You go in little and you add size. Do not be fooled by people who come and tell you about how they load the boats at one entry. For me, I don't do that. I do not do that because I've been in the game for long. I know what the market has done to me, and I've learned that entries for markets that are quite sluggish should be little by little by little. Gradually, you will get the idea. So yeah, now we are We look at the rule of the H4, which is in the ebook. What is the rule saying here? We are sideways with the H4, with the H1 moving averages, not the candles, please. The moving averages, and we are in balance. We have a signal day. I'm sure the screener should show that as a signal day. Let's see what Mr. Screener has to say. Mr. Screener, you have an error? Calculation timeout. Let's refresh you. Sorry, Mr. Screener. The screener calculates a whole lot of stuff, so it can calculate and go crazy. The screener can calculate and go crazy. It's calculating previous. It's calculating the week, calculating the closing price, the closes. The screener is built to work with the closes. All right, the screener is here. JPY, JPY. It's a first red day and a day zero. No, and it closed in breakout. So Mr. Screener has solidified the first red day. Obviously, like I said in the ebook, 3-day setups will evolve to a signal day. But how does price behave on this day is what matters a lot. We have an inside, outside, inside. Now, very good, very good. Thank goodness we have seen this pattern today from Al Brooks. It's called the inside, outside, inside. One inside bar, an outside bar, another inside bar that closes below near its low will collapse. Thank goodness we are seeing this lifetime. Inside, outside, inside. Now let me tell traders in the Discord. Inside, outside, inside, sighted. GBP, JPY. Sell more if it closes. Sell more if it closes near its low, but inside the outside bar. Professor Gakuna. Fucking shit though. Inside, outside, inside, sighted. Inside, outside, inside, lifetime from Al Brooks. Let's see how price behaves. We are selling, we hold ourselves tightly. Now the Euro USD is showing an FGD on the screener. But let's look at how price behaves. You know, as a trader, something shows you an FGD, you look at that market. Why is it showing me an FGD? Why should I buy this market? Okay, we are in an uptrend. The low of week is put in place, and we have the next day closing above the previous close. This becomes what? Day 1, day 2. If this market triggers the high, we've triggered the 3-day setup. The screener will write 3-day setup here, and a 3-day setup in an uptrend will blow off in the direction of the trend. So let's see how price behaves. We are in balance, so be careful. Let's look at USD card, FRD, USD card. Yes, of course. In a downtrending market, FRD is valid for Wednesday. Like I said yesterday, and I told Stacey, and we took this trade in the group together, that Wednesday will fall after our FGD on Tuesday. The market will fall on Wednesday after 3 levels of rise against the trend. So you see, we have another topic in the ebook that we need to talk about. 3 levels of rise, 3 levels of fall against the trend. It's very important to study that. We are in balance for USD card. Consecutive bear bars defines that balance. Thank you. Now, AUD card. AUD card says FRD, but then we look at our rule. Let's take a look at the rule of the H4. If you have not watched that video, kindly go and watch that video, the rule of the H4. The rule of the H4 in the ebook states what? State that what? After 3-day longs, the market seeks to investigate. It seeks to investigate the moving average. It seeks to investigate the moving average. You see it here? Let's count the 1 longs. Let's see, okay, from last week, the 1 longs. We broke the low. The 1 longs, the 2 longs, the 3 longs, and the new week is a 3-day setup. 1, 2, 3. Pulls back to the H4, rejects off the H4, FRD becomes invalid. Like I said in the ebook, 1, 2, 3. 1, 2, 3. Inside the AUD card is an inside day, okay, but we've rejected off and we're out of balance. Okay, it's an inside day, we're out of balance, the market is trending up. Do not sell this market. If you like yourself, do not sell this market. I should have looked at this market earlier, but the rule of the H4 is very obvious here now. For those of you who have studied that and have watched the videos on WAP, if you do not have access to my WAP, please get access and watch the videos for entries. Let's take a look at that real quick. So yes, this is the major round number hack. It's loaded here. Now let's take a look at the courses. Okay, we have the courses here where traders would study and understand the rules of the H4. You can see a H4 and H1 rules video, FGD and H1 and H4. Time frame rules, DAX, 3 days of breakout, area of agreement, breakout pullback trend, area of agreement equals to trading range. All of these lessons here, I will add a new lesson soon. I'm working on that lesson to make my traders very good. 3-day setups, also first ready 3-day setup and middle area of agreement. We have the ebooks, 20 AME and 1 hour chart. Watch this. The Bible, which is the one we are using to trade. 3 days of breakouts book, first ready, the major round number and the entry Bible, the new one. Reading price chart bar by bar at Brooks. I'll add the inside and FGD books. Yeah. So guys, you guys should check out this, watch the videos, video lectures, and make yourself solid in trading. Do not. This is raw experience of 7 years and a gift, a divine mastery. Now let's take a look at. Let's continue with that. What we are looking at, NZD USD. I told my student of mentorship that he should follow the lessons I gave him last time on the markets that are out of balance. Now let's take a look at the lesson I took him through last week. When he watched this video, he will smile that I took him through that lesson. Now let's go. Now yes, this is the lessons I took him to. No, this is particular one I showed him. Now yes, this is it. I showed him this example when the market is out of balance, how we tend to, when they come back and tap the previous day's low, or they don't even tap, they just remain outside of this zone, we can keep going as long as it's an uptrend. Now let's take a look at chart. And one motherfucker will sit down there in his house thinking that he can come and he can insult me on this space. I will finish you, a small boy. Now let's see 3-day setup, NZD USD. Why is it showing a 3-day setup and an inside day? This is a 3-day setup inside the template blowing off in the direction of the trend. A 3-day setup has templates. We have the inside day template, day 0 template. of the 3-day setup. Experience is what is this. I'm talking about experience here. I'm talking from experience. The code is written from experience. We have day 1, day 2, inside day 3. Triggers previous day's high in the direction of the trend. Do not sell these guys. Do not sell this unless you see price action patterns covering. I'm in a buy here. That's why I told you guys. I'm in the buy. I'll post this screenshot on YouTube. I'm in the buy. Okay, I bought this very market that is out of balance. A 3-day setup that is out of balance. So guys, I won't really take your time. I won't take your time. Let's see if our inside is head is getting correct. Yeah. So let the 1 hour candle close. We sold inside. It needs to close inside of this bar, and we'll see if we can have a collapse to the downside. GPUSD, we are still monitoring to see what they want to do here. We have this pattern in our books. Let's see what happens here. Very tricky. We have 2 hours left to determine a reversal down or a continuation up. Be careful with this market. Euro NZD, congratulations traders who sold with me. May the markets keep going with you. 1% better every single day. The link to my Signal group is just by purchasing the ebook and following us to learn. I want everybody to learn so they can take this trade by themselves. I don't want you traders to be spoon-fed. If I spoon-feed you, you will be lazy and you won't read and you won't want to hear from me or ask questions like why am I selling this, why am I buying this. May the markets keep going with you guys. 1% better every single day. May God give you all the wisdom, the knowledge and the understanding to study, the strength to bear the pains of the market and get good at what you do. Now, as for Gregory is a type of, if you are that kind of person that has a lot of ego, you don't want to be humble to learn, you will never go far in life. People are very obsessed and angry because they cannot make it in trading. The moment you start seeing yourself being obsessed and angry about the system of trading, you begin to feel more. Embrace learning. Open your mind. Remove hatred and anger from your mind or from what the market has done to you. Open your heart to learning new things. Be humble. Leave the YouTube videos alone. Purchase Stacey's playbook. Start with the playbook. Videos will not help you. If you are new to SB, this is for you. But if you started without the playbook from when Stacey started, you've watched Stacey for a very long time. Without the playbook, you were trading 3-day setups. Without a playbook, you are trading a first red day, you are trading a first green day. Before closing price, we have been there. So get his playbook. Study. Take your time and study. If you have difficulties, you run to people who understand it better, who are more experienced than you. We are like profs. You run to your professor, your lecturer. Okay, there are lecturers in different schools out there trading the same course, teaching the same course. Another university has a professor teaching the same course that another university has another professor teaching that same course. Run to us, will help you. But the markets go into the link to everything you need is in the description. 1% better every single day. Thank you and God bless you. Please endeavor to like and share with traders who are going through difficult times. Let them learn from this. Let the markets go with you. See you on the next one. Thank you.